Everybody, today is Thursday, May 27th, 2010. Let's take a look at the S&P 500. We did finish with a gain today of 3.3%, so that was impressive on a percentage basis, obviously. But when you frame it in the context of the declines we've seen recently, not really that big of a deal. A lot of people last week made a big deal about the fact that we closed below the 200-day moving average, and as I pointed out, it's very common in an uptrend for the market to close below it, but then pop back up above. And here, just after 5 days underneath the 200-day moving average, the S&P 500 did close above it again. The pessimist and the realist as well will say that we were up on light volume today, so we have to look at that and say that that's an important consideration, and it definitely is. The longer-term health of this market is still definitely in jeopardy. There's still a lot of trouble to this market. The underpinnings are not strong by any means. We've got a declining 10, 20, and 50-day moving average. So when I look at this and I say, a 3.3% move to the upside, it's a nice day on the upside for the bulls, but it doesn't turn the market back around by any means. I think we're in for a more prolonged period of consolidation, and maybe even we create a higher or lower high on the weekly time frame. We got quite oversold. If we create a lower high and then maybe that could create a right shoulder, then we break down maybe several months from now, and then we're in a bear market, on the weekly time frame. I don't trade the weekly time frames, but I'm aware of the situation that we have, and I want to use that and understand what's the psychology of what are other people looking at. What's most important for an intermediate term trader, I say, is the 5-day moving average. What's the direction of the 5-day moving average, and where are we in relation to it? Well, yesterday we got back above that 5-day moving average, but we were unable to break this downtrend line from about mid-May. So this mid-May trend line was broken today on the gap higher. And well, let's go back to yesterday for a moment. We had seen a breakdown, and the market then recovered quickly, and this break back down below that 5-day moving average, that which doesn't kill it, only serves to make the market stronger. So it created what we were looking at, that downtrend line, and we were looking at the resistance at 109.80. The market got back above that. It gapped higher today, pulled back briefly in here, and then took off. We had seen, now this is the third day in a row for this as well. I want to point this out. At about 1 o'clock, 1:30, we've seen some false moves really that have led to big moves. So on Wednesday, it looked like the market was going to break below the daily VWAP here and then maybe give up the gains that it had midday to that point. If you remember, that was the day. Let's just go back one more day to point it out. That 3 days ago, we had gapped lower. It looked like maybe we were going to head back down towards the lows as it was flirting with the volume weighted average price. Yesterday, it looked like the market was going to break out. It failed, and that was right around the volume weighted average price as well. And today, right at the volume weighted average price, we broke down briefly when the president was speaking. So that's 3 days in a row at about 1 to 1:30 p.m. Eastern time that we've had a false move, and it's led to a fast move in the opposite direction. So pretty impressive for a day, and that's all we have here right now. This line I wanted to point out to you that I have drawn in here as well. For some reason it's not clearing, but this could be a potentially important line. More important than what was the volume today versus the volume yesterday, or the volume versus its 20-day moving averages. Volume since the event. The volume weighted average price since it broke below that 118.50. The volume weighted average price has been about 112.25. That's what this line right here is. I just drew a volume weighted average price line in there, and we can see that maybe a little bit more clearly on the 65-minute time. We'll just take it right straight across like that. Well, if you look at that level, it also seems to be maybe an important level because it's been prior support right in here and resistance right in here. So maybe we get a continuation up towards about 125.25. We could also take a look at some Fibonacci on this market and say, where do we have the potential to bounce to? Well, if we take a look at the Let's just clear that line off first. At the recent highs at that 50-day moving average to the sell-off lows, this would put us right at about 112.65. So I think some further continuation up towards the 112 area seems likely, as long as we can maintain some higher lows and higher highs. I think tomorrow we'll want to see this market hold up above probably, what's wrong with my pen tool? Probably hold up above 109.30-ish area, 109.10 in there, and then we want to see a pattern emerge of higher highs and higher lows. If it breaks below that and we break that 5-day moving average, then we could go back to retest the lows. It's a trader's market. It's, in my mind, it's always a trader's market, because that's what I do, is I trade. So if there's any confusion as far as what time frame I'm talking about, I'm short-term oriented, but I'm always aware of the bigger picture, because it would be foolish not to be aware of that.